All right, here is Friday, October 6th, and it's the first week of a new quarter. So, again, there's a lot of volatility. I'm already going to show you what actually happened, but then I'm going to break it down so then you can understand the reasoning behind it, how you can use the intraday pivots, and then this recap also show you the multi-day pivots. But most of the stuff I'll talk about in some of the lessons I teach with the course. But in this case, on the recap, I don't want to go too far in the details on the fact that this is probably the worst day, but the best day, for me at least. As in best day, as in it proved a lot of points. It built a lot of confidence with me and then a lot of strategies that I'm doing. It was the worst day because I ended up blowing a lot of accounts and missed the entire move, even after knowing what will probably happen, because this is pure technical play, technical analysis using bigger time frames. So not to get into all that, at the end of the day, this is just a recap. I want to show you what happened in the market and why it happened and where you can find your best risk reward and how you need to think like a robot and not be emotional. So I drew the 12 o'clock session. So it's the morning session, afternoon session. This way you can see. You also see there's a lot of fib pivots. So before I start the video, I want to reiterate, if you've never seen any of these videos, that these are 5-minute candles on a 30-minute overlay. And then this is your static ATR levels. So let's go ahead, and I'm going to take off the extensions and also show the fib. So if you do that, all you're left with is the major levels. So it makes things a little bit cleaner when you're trying to understand what's going on with the market. So here you can see that this is the previous day close line. This is what I considered the bull pivot, bear pivot, mid-range pivot. This is the mid-range for the downside, and this is the +1 ATR or minus -81 to the downside. And here's the mid-range for the upside and the +1 ATR to the upside. So this is a phenomenon where this is rare, where we not just only made a +1 ATR move, it was more of a it was a +1.5 ATR move, because in reality, when you gap down and you hit the mid pivot, this was an extra 100 points that was added on to. Usually a full range is from the previous day close to the full range ATR. That's full range, and here you almost had 150 points. So if this was going to show on these extensions and you opened here, this technically could have came right here, but the market needed sort of like a catapult, fake people out and then rip it. So let's go into why this happened and how one should have played this. So the biggest thing is what I have here to the left is this chart. Now granted, I'm doing a recap of this video. This is about a week old. The market is already, this is the next week, but if you're looking at this week, this is what's happening. On a bigger time frame, on a daily, you're hitting a major weekly support, and then you're consolidating above it. So if you notice on a 30 minutes, you have a pretty well-defined consolidation pattern. You see how you're making lower highs, higher lows. It dropped. That's why you have all this volatility. It held, came back. It's making higher lows. So with that said, you know that you're getting potentially to the apex of the move. And when I say apex, you're getting to where everything's are starting to get a little bit narrow, and eventually something's going to make it give way. And sure enough, that's what ended up happening. You had this move where you gapped down almost to the bear pivot on the multi-day. So multi-day pivots help with a weekly overview. See, this is the previous week. This is this week. This is Monday, Tuesday, Wednesday, Thursday, and this is Friday. So this helps you get a bigger view. So then you know that, on a technical analysis approach, you have this consolidation pattern, and it's going to break one way or the other. And remember in past recaps, usually where you want to target anytime you consolidate is when it breaks out, you want to target to where the previous high is of that consolidation. And then that is why I just drew this line. And this will come into handy later on, and you will see. So what ends up happening is they gap it down, they hold it at the bottom part of this, and then they ripped it. And these are 30-minute candles with a 4-hour overlay. So here you have one candle, two candle, breakout. And that breakout happened at 10 o'clock. So the breakout happened before the European close. So keep all of that in mind, and let's move that. And actually, I'll just go ahead and delete that came on there. And let's look at what happens with the intraday pivots. What we want to use as a day trader is here you have a double bottom. You can sort of see on the 5-minute candles that, there's a lot of range. This was a ton of range. If you notice, these are 100 points in between here. Anytime you have a mid pivot and a bear pivot. So we were dropping 50, then we were going 100 points, then we were going 100 points down, then we were going 100 points up. This was going absolutely nuts. But then you have to think that if it's going to do that, that means something big's going to happen. So it's not going to just stay like that. So when you end up breaking back above, now you know you're going to fill this gap. So what ends up happening? It ends up breaking back above, and then right at 9:30, where are we at? We're breaking above right after 9:30, the previous close. So now you have a mid-range push down and fail, fill the gap, and now you have a lot of movement, a catalyst, or not catalyst, but a lot of potential stops being hit, like right here. So what ends up happening, again, even right here, what are you going to do? You're going to play the box play. So box play is you want to target from here and you want to go to here. What does it do? It ends up going here. 5-minute candles could not close. So what do? You short. Okay, you short. Once it actually popped above and stopped you out, you need to have that on your radar of okay, it's strong. And not just strong, look at this move. What usually happen is you see how it's consolidating above and break. You see how you have a consolidation below. If you end up failing, great, it fails, and now this is your range. But if you break back above and you see this is 10:30, you make a new high above. It's not necessarily a new high because that's the high, but you see how it breaks above the close of the new high, and you're above a pivot. Oh, you better believe it's going to get crazy. And sure enough, it did. So 5, 10, 15 minutes, you had another 100-point range right there. And so this is a very volatile day. You wouldn't want to be playing with a lot of contracts, but you could have easily done extremely well because of that anticipated move of the long-term weekly consolidation pattern. And now this is the day of reckoning where now everything's popping out. Now remember that one line I was showing you as an after consolidation, you want to target the high. Well, here's that line. What does it end up doing? It ends up targeting that immediately right until 11 o'clock. And remember, I talk Central Time, not Eastern. So add an hour, to the trading hours if you're Eastern. So what do we end up doing? We end up consolidating until the end of the morning session. And technically you could see, oh, this could be a double top. That's how I would play this. I would short right here, anticipating this to fail and then it to come back down. But remember, this is super strong and bigger time frame you're breaking out. So what do we do right at 12 o'clock? Remember the rule is you make new highs at 12 or 12:30, you're going to have a continuation. So what do? We end up breaking out at that 12 o'clock. And now instead of going short, you wanted to flip, you get stopped out, and now you want to go long. Now, afternoon session, you realize you just had a major move. So the odds are you're not going to move as much. And sure enough, if you see, we didn't move as much, but there's still enough to play. Because right here is 1560. right here is 15,120. So that would be a 60-point move. So one contract would equal $1,200. Not bad for risk reward where you get in, you get stopped out by 10 points, and you recoup all that and you hold until here. Once it hit here, the odds are I would have just wrapped up and not played anymore. You know why? It's because we just had a unicorn day. Unicorn day meaning this was well past an ATR move. It was an ATR and a half, and the odds are the Momo is died off. So that is how I would have played that day. Again, look at the bottom right picture as I'm talking. Compartmentalize what is going on, and you will see there'll be multiple opportunities. You miss a play. The emotions that get people in trouble are FOMO, missing out, oversizing, you name it. But if you get in and chasing, you need to wait. If you miss, wait for the next opportunity. Come back 30 minutes later, there'll be another opportunity. But remember, you need to sort of like, tell that story of what it's going on, as in we're making new highs, so the odds are we're going to keep pushing up. It's trapping all these shorts. The shorts are having to unload and buy back their positions, so it's pushing it higher and higher and higher. And more people try to short it, more it's going to keep pushing up. So it's a feeding on itself. So this was a massive move. Now, would I play from here all the way to here? Probably not, because like I said, I compartmentalize and I play from here to here. When the session's over, I play from here to here, then from here to here, here to here. I'm buying, selling as I'm going up, because it's there to protect your profit. Your job as a trader, if you get into this full time, is to protect your profit and protect your losses. You don't want big losses, but you want to have big wins. And you can do that just with not a lot of size and leaving enough room. So that is a recap of this day. Amazing day. Again, you don't see this very often, but maybe once every quarter, if that, maybe once every other month. So don't necessarily think this happens all the time. You notice in past videos that we usually go to a mid range or to a +1 ATR, minus ATR range. That's usually what happens daily. After a big move, you usually will have like a box play, which is a consolidation. So just remember what you're looking at and how you're visualizing your day, and you can take a lot of opportunity from what the market gives you. All right, till the next recap.